Welcome back to the deep dive. If you've been keeping an eye on the markets, well, you can't have missed the buzz around quantum computing.
Oh, absolutely. It's been pretty wild.
Some of these stocks have just gone parabolic. It feels like pure hype driving things, breakthroughs, acquisitions, big money piling in, almost like the dot-com days, but, with quibits.
Right. And that intense speculation, that kind of euphoria, is exactly why we're digging into the source material today.
Okay.
Our goal here is a real deep dive. We want to look at the actual financial data, the market feeling around four key public pure play companies. We've got IonQ, that's IonQ.
Yep.
D-Wave, QBTS, Quantum Computing Inc., QUBT, and Rigetti, RGTI.
So 4 big names in the pure play space.
Exactly. We're aiming to cut through the noise and just look at the numbers, look at what the research says.
Okay, and before we jump into those numbers, and believe me, some of them are pretty wild. We have to put up the big warning sign.
Oh, definitely. Crucial.
This is purely informational, educational. We're just talking about what's in our source materials, the analysis we've found. This is absolutely not financial advice.
Seriously, cannot stress that enough.
You absolutely must do your own homework, your own thorough research before making any investment decisions, especially in a sector volatile.
Yeah, that disclaimer is non-negotiable here because the tension in this whole sector is just huge, isn't it?
It really is.
On one hand, you've got this potentially world-changing tech, but then the reality check, these quantum systems, they're still very much experimental. They make errors. They're incredibly hard to scale up.
Right.
We're talking massive tech hurdles before they can reliably solve the big, complex problems everyone hopes they will.
But despite that,
you see retail investors, institutions too, just flooding in.
Yeah.
And it's driving these, you called them ungodly valuations.
Seems fair.
Often hundreds, sometimes even thousands of times their current fundamental value. It's something else.
Okay, let's unpack this then. Maybe start with IonQ. IonQ, they seem to be kind of the leader in the gate model approach.
Yeah, they're definitely positioned that way. The gate model, for listeners, think of it like the quantum version of standard computer logic gates. It aims to be a general-purpose, universal quantum computer.
So not specialized, aiming for broad applicability.
Exactly. And IonQ develops these general-purpose systems. Right now, you can get access to their, I think it's 20-qubit trapped ion system.
Yeah, trapped ions. That's their tech.
And crucially, they offer access through the big cloud platforms, AWS, Azure, Google Cloud. That makes them accessible, gives them a bit of a commercial leg up, perhaps.
And financially, how do they stack up in this group?
Well, looking at trailing 12-month revenue, TTM, they are the leader of these four, brought in about $52.37 million.
Okay, $52 million. But I'm sensing a but coming.
Oh, yeah. Here's the but. That revenue comes with a market cap of, wait for it, $18.26 billion.
Billion with a B.
Which gives them a price-to-sales ratio, TTM again, of 348.64. Let that sink in. 348 times sales.
Wow. And profit.
Or
lack thereof.
Lack thereof is putting it mildly. Their net income, again, TTM, is negative $463.58 million. So burning through almost $500 million.
I just have to pause on that PS ratio.
Yeah.
348. I mean, historically, what does that even mean? Is that just pure bubble territory?
It's pure forward speculation. I mean, absolutely. When you see 350 times sales, the market is basically saying, we believe your revenue will grow 350 times just to make today's price make sense. Forget future returns.
Right.
You really only see that pricing in like the very, very early days of something potentially revolutionary and super high risk, or, right before things pop. The market's pricing in total absolute dominance for IonQ years and years from now.
But they are making technical progress, trying to justify some of that optimism, right? They hit that algorithmic qubit score, the hashtag AQ64, ahead of schedule.
They did. And that's important. Hashtag AQ isn't just counting qubits. It's about the useful complexity a system can handle. So getting to 64 means it can tackle significantly more complex problems. It's a better indicator of quality and potential scalability than just the raw number.
So a genuine milestone.
Yes, and the stock reacted to it. And strategically, they've been pretty aggressive, buying up companies like Oxford Ionics, planning to get Vector Atomic.
Right, expanding their capabilities.
Yeah, accelerating work on quantum networking, sensing, and they're looking globally, UK, Europe, Asia. Plus, that board appointment was interesting.
General Raymond, yeah, former U.S. Space Force chief.
Exactly. Signals a very strong focus on defense, national security. Think government contracts, like that deal they have with the Department of Energy for quantum in space.
Makes sense. Government and defense are likely the first big customers for tech this expensive.
For sure. But the analysts, they are all over the place on this one. Price targets are, like, incredibly wide. You see optimistic calls up near 82.2, but then downgrades down to $35 or even $29.
That spread just screams uncertainty, doesn't it?
Total uncertainty about how to actually model revenue for a market that barely exists yet.
Okay, let's switch gears then. D-Wave, QBTS, completely different strategy here, right? They're all about quantum annealing.
Totally different. Yeah. Forget the general purpose calculator idea. Annealing is a specialist. Think of it like finding the absolute lowest point in a massive, complicated landscape of possibilities. It's built for optimization problems.
Like finding the best route or the most efficient allocation.
Yeah.
That kind of thing.
Exactly. And the sources cite them as the only public pure-play company that's actually generating revenue just focused on annealing.
Okay, let's check their numbers. Still dizzying valuations.
Oh, you bet. Revenue TTM is lower, $22.27 million, but the market cap is still huge, around $9.89 billion. That gives them an even higher PS ratio than IonQ 444.
444 times sales. Wow.
But here's something interesting. Their gross margin is really high, 82.46%.
So when they do make a sale, it's very profitable at the gross level.
Extremely. It suggests the service itself is valuable, but again, massive losses overall. Net income TTM is negative $281.54 million, still burning huge amounts of cash.
But didn't they have some real-world proof points recently? Something with police in Wales.
They did. That was a key point in the research. They used a hybrid quantum classical system to optimize where police vehicles should be placed for North Wales Police, and apparently it beat the classical methods.
Okay, that's tangible, a real operational benefit shown.
Exactly. Plus, they secured $400 million in funding recently, so their balance sheet looks stronger, more liquidity.
Which is vital in this game.
Absolutely.
Right.
But that funding came via stock offerings, so analysts are definitely waving red flags about dilution. That $400 million helps them survive, sure, but it means each existing share represents a smaller piece of that very speculative pie.
Right. Okay, moving on. High risk, high reward territory now. Let's talk Rigetti, RGTI. They're doing full-stack quantum classical, but their hardware is superconducting qubits, right?
Yep. Superconducting. That's the tech folks like Google and IBM have been working on, too. Requires cooling things down to near absolute zero.
And Rigetti stock has been on a tear recently.
Oh, yeah. Absolutely exploded. Up something like 83.6% in September alone, way ahead of D-Wave or QUBT in that period.
Are there news driving that? Or just momentum?
Well, there were some solid commercial milestones. They got purchase orders worth $5.7 million for 2 of their 9-qubit Novera systems.
Actual sales. Okay.
And a government contract, too. $5.8 million from the Air Force Research Lab to work on superconducting quantum networking.
So real progress being reported, and big investors noticed.
Apparently so. The sources mentioned that surge created a nice little windfall for some big names like Ken Griffin and Tudor Jones.
It's interesting, but the financials, still the same story.
If anything, even more extreme. RGTI's TTM revenue is tiny, just $7.92 million. Compare that to their market cap, $11.48 billion.
So the PS ratio is astronomical there.
It is, and if you want the real gut punch number, look at their free cash flow margin. It's negative 827%.
Minus 800%. Meaning they're burning cash how many times faster than they're bringing it in?
Yeah, it's burning cash at a rate that just dwarfs any income they have currently. It really highlights the financial tightrope these companies are walking.
Okay, one more. Quantum Computing Inc., QUBT. Different tech again.
Right. They're focused more on software tools. They have something called Catalyst, and their hardware bet is on photonics, using light particles. So that's trapped ions, annealing, superconducting, and now photonics. 4 distinct bets.
And QUBT's revenue.
Even smaller. TTM revenue is just $263,000, like basically zero for a public company, but the market cap, still $3.19 billion.
$3 billion on $263K of revenue.
Okay. Their story recently has been all about the money, though. Pure financial drama.
What happened?
They announced this huge private placement, $500 million, oversubscribed. After it closes, they expect to have about $850 million in cash.
Wow. That's a war chest.
Huge. The sources estimate that gives them potentially over 20 years of runway at their current burn rate.
20 years. That's incredible security in this cash-burning sector.
Yeah.
But there's always a but, isn't there?
Always. That $500 million came from selling stock. Massive dilution. The announcement hammered the stock price down 15% in pre-market trading.
And legal issues, too.
Yep. Critically, it also triggered announcements of class action lawsuits, alleging violations of securities laws related to that stock offering. So, yeah, drama.
So QUBT is basically the ultimate bet on cash lasting long enough for the tech to maybe work out.
Pretty much. I mean, their price-to-sales ratio, it's quoted at 12,150.
12,000.
12,150 times trailing sales. It's purely speculative, driven
Wow.
by hope in their photonics tech and the fact they have this massive cash pile. But you have to ask, right? What good is 20 years of cash if your tech gets leapfrogged in 5?
That's the multi-billion-dollar question.
Exactly. So if we try and connect the dots here, pull back for the bigger picture across all 4. Some clear themes emerge, don't they?
Definitely. Number one seems to be just insane cash burn.
It's universal. Huge operating losses, negative net income, consistently negative free cash flow. It's not small losses, it's hemorrhaging cash, but it's kind of necessary for the R&D right now.
Second, the valuations are completely detached from current reality. It's all hype and future hope.
Absolutely. Trading on momentum, breakthrough announcements, funding news, it's basically placing very long odds bets, not traditional investing based on fundamentals.
But on the flip side, the third point is that growth is projected to be massive eventually.
Right, that's the bull case. Analysts are forecasting huge revenue jumps down the line. Like for IonQ, they're projecting revenue going from maybe $91 million in FY 2025 to almost $500 million by 2028.
So investors are betting today's horrifying losses will look tiny compared to future dominance.
If they pick the winner, yes.
Oh.
And that's the fourth key point, the technological gamble.
It's a battle of fundamental approaches. Trap ions, superconducting, annealing, photonics.
Exactly. This isn't just about market share. It's about which core technology actually proves scalable, reliable, and cost-effective. If, say, superconducting hits a dead end.
Then investments in companies focused on that, like Rigetti, could just evaporate,
Yeah.
regardless of contracts they have today.
Precisely. It's a fundamental platform risk, which is why critical thinking is just so essential here. The market's running on sentiment, funding news, but long-term survival. That means commercialization.
Getting from those nice gross margins D-Wave has to actual positive net income and free cash flow.
Yes, and that is the major hurdle that, based on the sources, all 4 of these companies are facing for quite some time.
So what this really boils down to, for you, the listener, is weighing that incredible, almost science fiction potential. Quantum computing maybe becoming the next NVIDIA, changing everything.
Against the cold, hard, current reality.
Which is.
Yeah.
The tech is expensive, hard to scale up right now, and these pure play companies are losing tons of money and constantly needing to raise more, which dilutes existing shareholders.
It's a massive risk-reward calculation.
So thinking about that intense competition between the different technologies, ions, superconductors, annealing, photons, maybe for a final thought to chew on, who's more likely to win?
Is it the company with the most revenue today, like IonQ, suggesting they're furthest along commercially?
Or is it the one with the massive cash runway, like QUBT, who might just outlast everyone else until their tech matures?
There's no easy answer there, and that's why, again, this deep dive gives you data, context, themes from the research, but the decision, that's entirely up to you after you do your own careful, independent homework.
Absolutely. Please remember, one last time, this is for information only, not financial advice. Be incredibly cautious in this sector. It's exciting, but highly speculative.
Extremely.
Okay, thank you for joining us for this deep dive. If you did find this breakdown useful, we'd really appreciate it if you hit that like button, subscribe to the channel, and maybe ring that notification bell.
It really helps support what we do here.
And helps you catch our next deep dive. Thanks again, and we'll see you soon.